All right, traders, welcome back to the Unique Trading Group channel. This is your weekend edition. Hope you guys are doing great out there. We got Labor Day week coming, right? Monday, the market is closed. So we're going to be prepared. That way, Tuesday, we know the setup. We know what to look for the rest of the week, all right? We are going to be locking in on spot today, all right? That's right. One of the heartbeats, that's right, heartbeats of the market. So forget the noise. Please forget the noise, forget the distractions. SPY tells us where the whole game is headed, quarter to the ES, the futures market, all right? So this is a weekend special. Why? Because Monday the markets are closed again, and Tuesday we open September. And trust me, that opening is going to be volatile. So here's the question. Are we still bullish on the macro? Or are we about to step straight into bear territory? Stick with me because I'm going to break down the secret signal that traders are ignoring. This one is going to tell you whether or not to buy the dips or to sell the rips for the rest of the month. But before we get into it, I appreciate the time and clicking on this video. I want to give you value in return. So do me a favor, subscribe to the channel, all right? Hit that bell notification. That way you're informed whenever I drop valuable videos, okay? Now, smash the like button so this video passes along to traders just like you in the trading world. We're going to get right into it. We're going to do some recapping from the video I prepared you guys for last week about the SPY and what to look for. Guess what? That is still happening, and we got to wait for that signal. That signal is flashing, and we want to see what the monthly close is going to be. So before we get into it, of course, you know how I like to do your receipts before I get into the meat. All right. And we're going to check out some commentary from Tom Lee. I want you guys to understand what's going on, all right, from a contrarian point of view, all right? So we're going to be right back after this commercial break. All right, now we are back. This is a quick recap video from the slingshot reversal video I did last week, all right? It was about 2-3 days ago, all right? And this is what's going on, and this is what happened. Peep out the accuracy, and we'll be right back with the commentary. What do we have on the SPY, all right? We are at the top of that range in our daily price movement system, okay? So let's say you did that this morning with the previous range from the current candle, okay? Now you see that we have extremely went up inside of the daily price movement range, and we are currently rejecting these highs, okay? Could we create a higher high? That's what we are waiting for, because that is a trending market, and we have been trending all day long, okay? So you're always gonna wait for the pullback, okay? We go up, we go down, okay? We go up, we go down, 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 all right? Same old, all right? Where's your entry? Where are you waiting for it to enter at the best risk to reward? At the higher low, at the curl, all right, showing demand, the previous demand levels, okay? What are we gonna have, okay? If you don't like that trade to the upside, you wait for a break. If you want a better risk to reward, you wait for it to pull back a little bit, right? But you're watching market structure to see what's going to break, all right? And that's my you see that? That's my take, all right? And that was a slingshot reversal video right after the NVIDIA earnings for the SPY all-time high. And at that moment, we were at 647, okay? We were at 647 at that moment. And guess where we are now, all right? We are at 645. So we got that pullback, but we're still creating high lows with volume kicking in. That's what you needed to pay attention to, all right? So before we get into some more commentary to finish off, I want you to check out Tom Lee, all right? Check out Tom Lee and some of this commentary before we get into the meat of the video to finish it off. You want to stick around because what I have for you guys will possibly be one of the biggest trade setups for you for the rest of the year and for the rest of the month. So let's get into this commentary before we finish the rest of the video.
So I'm going to shut up because Tom Lee is here on set. Tom, thank you for coming on. Really appreciate it.
Yeah, great to see you, Brian.
I know a lot of people want your take on the video, and we'll get all that stuff. How has it been in April? You remain bullish even when everybody was running around with their hair on fire. Is it hard? Do people come at you and be like, how could you be so bullish all the time, Tom Lee?
Yeah, I think that we get more criticism than positive feedback to any of our views. I mean, if someone follows us on social media like Twitter, or if you look at the comments on our YouTube clips, or even sometimes unrequested inbound emails to our firm, usually it's criticism.
Yeah, it's amazing what people can do when it's anonymous, right? And they write in whatever. But those people, you've been right. I mean, you've been bullish. You've stayed long. You've stayed strong. What are you seeing maybe that some others are missing? I don't know.
Well, I think too many people are tied to their own biases. So like when markets were falling in February to April, then in their own portfolios, they were suffering damage. And as you know, that gets into people's sort of psychology, because no one likes to lose money. It's more painful to lose $1 than to gain, than the joy of gaining $1. But what we did was we took a step back and said,
Want to pause for a second. He just mentioned psychology of people when they're losing money. This is a good segue to let you guys know to check out that link below inside of my playlist for YouTube. All right, subscribe to the channel so you can check out a video series that I have about psychology. All right, it's called the Discipline Files. So you want to think about psychology and the mindset of a professional. All right, check out those episodes. Catch up, start with part 1 and catch your way up so that way you'll be informed. All right, let's continue the commentary.
With all the forces at work, are we really going to drive the economy off a cliff? And if that answer was no, then we know that at those points of fear, that's when, as hard as it is to do, is you either have to hold on or buy, and that was our advice to clients.
Yeah, and is there anything that you see in your research, Tom, that would imply that this momentum trade, if it is indeed a momentum trade, is going to end anytime soon?
We don't. We for instance, if we take AI as a thought, and we, let's say, overlay something like the exponential growth of the wireless industry, that was a 20-year period when the number of users went from 37 million subscribers to 7 billion. We don't have 7 billion ChatGPT users, and we don't have 7 billion robots. So I think if not yet, that's right. And so if someone's trying to ring the bell at the top for AI, they're underestimating how quickly penetration grows. We're probably in the first quarter or first third of that cycle for AI.
All right, guys, so we're going to pause that video there, okay? And we're going to get over to the charts. Now, as you can see, all right, there's a lot of talk, a lot of fear coming from the outside, all right? Big people with money, small people like retail traders, all right, they're in fear. But they're missing that one signal. And I wanted to bring you guys attention to the monthly time frame, okay? We're going to clear this chart, all right? And right now in front of you, what you see is actually Heikin-Ashi candles, okay? And we're going to turn off the Heikin-Ashi candles. If you don't know what that is, that's just fine. But it does clear the noise. I like to see solid bars on the bottom for green with no wicks. And for a market drop, I want to see solid top with no wicks, okay? So let's go ahead and change the candles. All right, now I don't particularly trade candlesticks, but most people do, so we're going to stick with that. All right, for the purpose of this video. All right, if you've been liking it so far, getting some information, soaking it in, hit that like button. Okay, listen, this is, all right, a rare signal that's flashing. Okay, this is the one signal traders cannot ignore. All right, now let's talk about it. The one signal that separates the random guessing from the disciplined trader. It's the monthly close. Here's how it works. If SPY opens up, all right, if it opens up September underneath the August monthly close, that was last month, this month here, all right, if we open up under that monthly close of August, the price becomes a wall. Every time the bulls push into it, they get slammed back down if it shows as true resistance. That's resistance. That's the rejection, all right? That's bear territory, all right? That's bear territory. And that number would be 645. You see that? This is the previous close of the month. This is the one that can act as resistance, all right? 645, or flip into demand. The disciplined trader is going to wait for the signal. You understand? Waiting patiently to see if it holds throughout the week. Remember, we have a short week next week, all right? So, but flip it. If SPY opens up and pushes above the August monthly close, that wall transforms into a floor. Now, it's not resistance anymore. Now it's support, all right? Demand. That's the zone where smart buyers load up on the pullbacks. That's the territory. We've already went through this, guys, all right? I showed you my recap in the beginning of the video with the pullbacks, all right? The patient, the disciplined trader, understanding this is a video game, right? Where it's all based upon us. If we click the button, all right? The computer can't make us click the button. We do. So nobody's out to get us. We just got to have a clear plan, a trading plan, and an edge, right? Over a series of trades, all right? We focus on risk to reward, all right? How good is the setup and how good did I lock in my gains before the trade went against me, okay? That's what you want to be thinking about. Now, I want you to picture this, okay? The chart is just not candles, all right? It's psychology. Institutions are watching, all right, this line here, okay? So we're gonna get real funky with this. I want you to understand, all right? Institutions are watching this horizontal elementary line, all right? All right, that's the line we're watching for. And since we rejected from there, we want to see if it continues. If it gets above, we change our horizontal elementary red line into a green line, all right, for a price to bounce there, okay? Now listen to me. The algorithms are coded to respond to this line. Pay attention. It's the line in the sand. So when you see price under that close, short the pops, period, all right? And we're going to get into a quick review on those charts on the entry day so you can see that in real time, but it's basically higher lows, okay? So stick with me. Don't make this hard, all right? When price gets up under here, you want to short the pops. When you see it above the close, you want to buy the dips. That's the playbook. Simple, right? But stupidly effective. And listen, once you start trading with that awareness, everything changes. You're no longer blind. You start reacting and you start anticipating. You're no longer prey. You're the hunter, okay? This is where discipline lives. This is where consistency is built. And this is where traders who know the code separate themselves from traders who guess, all right? So listen, if you want to learn a stupidly simple trick to maximize on gains and protect your risk, join the Unique Trading Group. That's where we break this stuff down every day, step by step. All right, we have proof. Shout out to my tier 2 subscribers in the group who are dedicated and they're every week. All right, we have fun and we learn together. All right, so at least grab that book down there below in the description because it's laid out crystal clear inside that book for option traders and those who want a beginner step. All right, so those links are down in the description. All right, and that's how you stop guessing and start trading with precision. Now, let me show you the same principle playing out elsewhere. All right, right now we on SPY. We're gonna check out Tesla, Bitcoin, and Google as well. All right, now let's go down to the entry time frame so that you can see on the hour what we have. All right, remember that red line is a line in the sand. Next week on Tuesday is going to be a opening or close of that monthly candle for September. And if we open below this previous close, we're going to see some continuation to the downside. If we open up above this red line, we're going to see continuation towards the upside. So that's the signal you're waiting for, waiting on that pullback to happen as we spoke about on the last video, okay? Sometimes I make these videos and they apply for the next couple of days because it hasn't happened yet. So we are practicing patience, and I want you to understand that this is not really too hard, all right? So let's go and switch over to Bitcoin. All right, the crypto community has been on fire. We had some pullback, so there's always the panic selling and the fear mongering, right? But we pulled back, right? This is typical. People made money, they bought the dip before, all right? And depending on how much money they make, all you got to do is catch the line in symmetry, all right? Simple things you learn when you first trade. Lower highs, see, lower highs. This is downtrending lower highs, okay? All right. Once we hit this same range here, all right, we bounced before, we bounced here, we bounced a little bit, and now we are ranging on Bitcoin. So this is what we're waiting for a range, all right, break down or break out, all right, break down or break out. That's what we're waiting for Bitcoin, all right. We need next week to come out, all right. We have a lot of economic data, and that economic data means something. So it's going to be a heavy red star for the news type of week, and so you guys want to be careful. Maybe sit to the sidelines, watch some of these things play out. But right in front of you here, let me show you real quickly. All right, next week, of course, the market is closed on Monday. Tuesday, we have the PMI number, right, 10 o'clock. Watch that time. Watch SPY 30-minute. That might be that rare signal waiting, all right? That's the catalyst for price, all right? Wednesday, we have more PMI news, more people speaking inside of the Fed. We have that JOLTS opening number. Thursday, unemployment claims, more PMI numbers, right? So they're hitting us heavy all week up until Friday. So guys, be cautious and be prepared. If you're not ready, don't trade. Sometimes the best trade is no trade, all right? And if it's too hot, stay out of the kitchen. You understand what I'm saying to you? All right, so Bitcoin, we're at 109. We got to get past 110, all right, 110,000 in order for us to see continuation for the bulls to find some momentum within that range, all right? And even though we do that, we still can see resistance over 111. So trade with the best risk to reward. You understand now? Let's hop over to Tesla, all right? The market is raving for Tesla, Elon Musk and company. What do we have here? 333 now. Right here in front of you, 333, all right, is a previous zone where we bounced before and we also rejected. See, previous times here in front of you where we rejected right here. So it's all about waiting for that perfect signal. Same thing with the SPY on a monthly time frame. You do the same thing with Tesla, Google, and Bitcoin, all right? The only difference is I'm giving you commentary on the technicals, all right? That's what really, really matters. So going to the monthly time frame, all right, what you can see here is on Tesla, we have a lot of buying going on, all right? Tom Lee and his cohorts, people are buying, Kathy Woods, and Tesla's becoming to be more than just a car stock, which has never really been a car stock, but that's the perception of what people think because he makes cars. But Tesla is way more than a car company. They're getting into AI, infrastructure, data, things like that that's been going on, and new endeavors. So I would say the breaking of this triangle here, all right, if we can get past the range here on the monthly, which is 359, that's the range we're in. As long as we stay above 338, all right, that's the magnet for price to get to at 333. All right, if we stay below 340, we're going to continue to fall down. Right now we're at 333, but you need to understand that 330 is the line in the sand. 330, we're at 333 now. Watch the monthly close. 333 is the monthly close for Tesla. If we get below that, you will see prices go down. Your first target to look for is 330. You understand? Now, we'll get back on Tesla as the days go by. But I am bullish on Tesla, but I always like waiting for pullbacks. You understand? It's the same deal. I pointed out that rejection area in the past video. I told you the market, and boom, that's what you got. Tesla is bouncing exactly where we expected. This is what happens when you respect structure. It's not random. It's not noise. It's supply and demand. 10-year veteran speaking to you because I'm passionate about it. So take your notes and make sure that you're paying attention, all right? Because this is auction theory, all right? Where is the money? Where are the buyers and where are the sellers? Once you can read it, you're no longer guessing. You're playing the same game the big money is playing, all right? So how do we turn all of this into profit? Let's go to Google and finish this segue. If you've been rocking with me this long, guys, thank you for sticking with me. There must be some value. We're going to finish this up with Google, and we're going to spin the block back to SPY. Now, this is a actual trade that's inside of my Discord that I gave out last week, all right? So here's the deal. Next week is going to be a lot of people chasing, right? Especially for SPY. What you want to do is, all right, think about this time work, this time frame of scalping, right? So how do we turn this into profit? This is where the scalp and the runner strategy comes in. Here's the formula. You enter while the signal hits. What's your signal? The opening and the closing of the monthly candle. You scalp the momentum, a quick hit. Take 20 to 30% to scale out, all right? But you have to leave a runner. That's right. You have to leave a runner. You understand what I'm saying to you? That's the most important part, because if you're going for the base hits, you want to lock in profit. But if the momentum is strong, you will always have that money working for you as long as you have time on your contract when you're trading options. This is not futures or Forex. In options, we deal with contracts. So when time expires, you are all the way out of the game. You want to make sure you got a cushion and a plan to trade around it. Why? Because sometimes that runner turns into a big move, the move that pays you for the week or even the month. That's how you build wealth on top of the income. All right, so even if you're trading contracts 3 months out, you're not sure about leaps, which are a year or more, but not enough time, if the momentum kicks in, you can catch that explosive move in a matter of days. All right, sometimes even the minutes. All right, so the difference is really simple. All right, it's really simple. You're not chasing, excuse me guys, you're not chasing, you're not hoping, you're trading with edge. That's why 90% of the time when your trigger hits, you're already green, because you stepped into a setup that was working in your favor from the jump. All right, so let's talk about mindset, because this is where traders either break or break through, and that's just the truth. All right, now take a look at this Google chart. All right, Google is making a technical trap, bear trap. All right, one try, two try. This is a W shape. Yes, if you're watching for the first time, yes, you listening. A W shape is a way you can make money in the market if you spot it and understand why. All right, it's a simple shape. You know what a W looks like. Okay, here's the W, and here's the W on the chart on this Google chart. All right, again, this is a call out stock inside of my Discord. All right, we've already broken out this neckline and we've already started bullish momentum. I want to see Google open up higher than 212.91, and I want to see it hold there for the rest of the month. As long as it can hold 212.91, and trust me, you will see this. All right, you will see this. All right, 212.91 is strength. All right, holding there's demand to buy leaps or to swing. And 207.28 is a pullback zone, so we could fall back to 207. Understand, even if we get above it, there's a chance we could fall below. Why? Because we have economic data and more earnings. These are catalysts, all right? These are catalysts. And sometimes when these catalysts happen, it affects price, all right? But it gives us that discount because I am super bullish on the market. So I want to expect some of these discounts, all right? So most people, they're chasing green candles. They're not looking at the setups that we're looking at. They're panicking on red candles. They're reacting emotionally. Not us. We run this matrix twist, all right? We see the code. We're focusing and trading from a clear state of mind with a trading plan. The discipline comes from us executing over a series of trades. Think about flipping a quarter 25 times. If you flip a quarter 25 times, there are only two options, right? Heads or tails. The only difference is you don't know how many times it's going to flip on heads or tails, but it's a probability. You know it's going to happen, so you get in position. You understand? So you're waiting for your signal, taking those trades in a series of events, thinking about risk to reward. Remember, guys, it's always about the process and not the profits. You understand what I'm saying? So once you learn to see the market as a negotiation between buyers and sellers, once you understand auction theory, the randomness disappears. The market is very unique. The market becomes structured. That's freedom. That's discipline. That's how you stop fighting the market and start flowing with it, all right? I want you to start flowing with it. And once you've seen the code, again, you cannot unsee it. And of course, don't forget the backdrop. September is historically volatile. And of course, when you add in the payroll reports, inflation numbers, and the Fed chatter, the unexpected Trump tweets that we get throughout the week, you got gasoline waiting for spark, all right? So here's the key. Don't drown in the noise. Don't get lost in the headlines. Stick to the framework. Stick to the monthly close. Above it bullish, below it bearish. See how simple this can be? Everything else is just a distraction. You understand what I'm saying? So I really want to wrap this video up. All right. I said I wanted to double back to SPY. This is one of my call outs right now inside of my Discord. As you can see. All right. We're going to look inside of the Discord. It's going to load up here. All right. All right. Now listen. Inside of my Discord, okay, we have these swing trade alerts. And here recently, Google is one of those. I want you guys to stay tuned. We're going to come back and revisit Google, all right? I want you guys to see on the inside, all right? And we're going to see some more of those posts in your profits and the other episode, all right? But for now, let's go ahead and get back to this chart, all right? We're going to get back to SPY. All right, thank you guys for watching this long. If this has been a valuable video so far, go ahead and hit that like button. All right, we're going to wrap this up. All right, here's your September playbook. Watch the monthly close. Above it, demand zone, buy the pullbacks. Below it, resistance, short the rips. Scalps for income, runners for wealth. All right, more gains over time. That's the edge. That's the discipline. That's the system. Now, if you want to go deeper, if you want that stupidly simple trick to maximize on your gains while protecting your risk, I think you guys know what to do. All right, join the unique trading group. All right, join the unique trading group. Grab that link below. All right, those links are below. Appreciate you guys watching. Please subscribe to the channel and hit that bell notification. That way you're ready Tuesday when the market hits and you get those notifications. That's where the casino starts. All right, and smash that like button so that this video reaches more traders who need to hear this. So stay sharp, stay disciplined, and I'll see you on the charts. And until the next time, guys, peace.